Coming up on Market to Market, a shutdown showdown puts more than MFP payments in jeopardy. Industrial hemp makes its way out of the shadows. A cattle producer convicted of fraud spends a year in prison. Those stories and market analysis with Mark Gold next.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, December 21 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. The president made sure the lame duck Congress had plenty to do. The shouting was heard down the street at the Fed. Interest rates were boosted for the fourth time this year as President Trump tried to legislate economic policy via Twitter. The Dow Jones Industrial Average endured its roughest week in 10 years, and December is on pace to be the worst since the Great Depression. The rate increase, coupled with explosive debate over presidential demands, contributed to the volatility. The Creighton University Rural Main Street Index has yet to reflect that tension. The index rose above growth neutral despite farmers facing income losses, the potential for more loan defaults, and an increase in collateral requirements. One link in the chain of support for farmers and ranchers is the Farm Bill. The president signed the 2018 version, but implementation is on hold. Key to funding the nearly $1 trillion measure is a continuing resolution for the federal budget. A shutdown seemed inevitable when this program was recorded Friday. Peter Tubbs and John Torpy have more in this week's Policy Roundup.
One provision of the 2018 Farm Bill gave a boost to growers of a commodity with a rich history. Industrial hemp received legalization in the 2018 Farm Bill.
There we go.
Producers will now be able to budget production of this crop like any other on the farm, as well as be eligible for crop insurance. Industrial hemp can be manufactured into hundreds of products, ranging from clothing to biofuels. However, the cousin to cannabis is more popular for its medicinal properties through the production of cannabis oil and CBD oils. CBD is valued among the medical community for its numerous health benefits, including the treatment of anxiety, arthritis, and chronic seizures. The Food and Drug Administration will continue overseeing the growing business of CBD oil production, which is predicted to earn over $1 billion annually for the hemp industry.
The 18-month journey of the 2018 Farm Bill concluded this week with President Trump's signature on Thursday. But a change in USDA policy sparked controversy even before the signing. The USDA has proposed eliminating waivers that individual states use to ignore work requirements for specific SNAP recipients. The rules come into play when the supply of jobs in a community falls below a certain level. Under current law, able-bodied adults without dependents cannot receive SNAP benefits for more than 3 months out of any 3-year period without meeting certain work or job training thresholds. This group represents less than 10% of the 40 million Americans who receive SNAP benefits. Increasing work requirements was a goal of Republican lawmakers in the House during negotiations on the Farm Bill and was dropped in the final days of talks in order to reach agreement on the package. The new proposal is being interpreted by some as an end run around Congress. All of this news was overshadowed by a White House threat to close a large swath of the federal government over Congress's failure to allocate $5 billion for the construction of a wall along the southern border with Mexico.
I've made my position very clear. Any measure that funds the government must include border security, has to. Not for political purposes, but for our country, for the safety of our community.
A continuing resolution to keep the government open passed both houses of Congress this week. But President Trump announced Thursday morning that he would close the government until funding for the wall was allocated. Over 800,000 employees deemed non-essential will be furloughed, and more than 420,000 will work without pay, including Customs and Border Enforcement and meat inspectors. The shutdown takes effect at midnight, Friday, December 21st. From Market to Market, I'm Peter Tubbs.
Few are immune from the frustration and fear that goes with having debts exceed income. Those that benefit from USDA programs and defraud the government to solve their money problems can receive hefty fines or jail time. Cheating the USDA costs taxpayers millions every year. You can find more on this topic in a special section of our website, markettomarket.org/justice. Colleen Bradford-Kranz has the final installment of our three-part series, Justice in Agriculture.
Joey Nelson was on top of the world when the first big loads of cattle arrived at his new Bramer, Missouri feedlot in 2013. The 19-year-old had a government loan and was anxious to grow his operation. Nelson's supplier, Iowa-based Cyclone Cattle Company, was purchasing truckloads of cattle from drought-stricken southern states and sending them to Nelson as well as others. It was only a short time, however, before Nelson was overwhelmed.
They thought that they were going to get rich off of this, and they didn't have a place to go with them. So they just kept sending them here. Everything works until you run out of grass or feed or money. One of the three. Run out of grass first, so you went to feeding more, and then the feed bills get bigger than the bill they want to pay. Then you run out of money.
By then, the young farmer was trying to feed nearly 800 steers and cows as Missouri faced a drought of its own. Nelson's debt grew to nearly $300,000. That's when Nelson made the mistakes that would land him in federal prison. He sold some of his own cattle without notifying FSA, a requirement when livestock is tied to farm loans, and failed to ask the sale barns to list the agency on the checks. Nelson knew he was violating the rules, but moved ahead, hoping to avoid a months-long delay that might follow a request to the federal government.
I figured I had done something wrong by not going through the proper channel to sell the cattle. I mean, you run out of operating money, and if you want to keep the cattle alive, you're going to sell something to feed them, to pay the feed bills.
Court documents suggest that Nelson deliberately hid the sales by having checks written out using a different version of his name than is on his FSA loans. Some checks also were made out to a friend, the money later transferred to Nelson's bank account.
I'm not going to say that I didn't sell some of the cattle that were on my loan note, because we did. But we didn't sell them to, go buy a trip to Hawaii or anything like that.
Occasionally, farmers who cheat federal programs or mislead consumers are accused of using the profits for purchases the government would describe as being for personal enjoyment and pleasure. In 2016, for example, an Idaho farmer was sentenced to 3 years in prison for selling regular alfalfa seed as organic. Court documents say he used the profits to buy an RV and a boat. Dr. Michael Roseman, an Iowa-based psychologist, says that more often than not, producers who get in trouble with USDA made decisions that were intended to keep their farm or ranch financially viable.
Often there is a misconception that farmers deliberately undertake fraud, or if they do, only to make money, but that's not the main reason. I think the main reason is that farmers want to get ahead, and they may have made mistakes and they can't bear to own up to them because it is an admission of weakness.
In rare cases, some psychologists believe, those farmers who were charged have committed suicide to either avoid serving time in prison or facing the public shame. Roseman says the data shows a shift away from older producers taking their lives.
Now we're seeing younger farmers from age 45 up to their late 60s as the most vulnerable for self-harm. And we're trying to figure out why that is. Possibly it has something to do with a sense that I only have a few more years to succeed, and it's make or break time.
Before Joey Nelson knew it, he was standing before a federal judge in Kansas City, being sentenced to 2 years in the U.S. penitentiary at Leavenworth, Kansas.
He said when he gave me the 24 months that he was making an example out of me to the agricultural community. And I thought, boy, some example. You guys advertise your loans very hard. And this is what will happen if something goes wrong.
Nelson, now 24, believes FSA loans are not only important, but critical to keeping American farmers in business. He does wonder, however, if young farmers with loans should have a greater degree of oversight and guidance.
I thought, well, at the worst case scenario, I've done something that I broke a rule in a loan. Didn't commit a crime. I didn't, go out and rob a bank or anything like that. I mean, I broke a contract. Well, not when it's federal. You've committed some sort of fraud. They said that I'd set out from day one to do this. Well, I can tell you from day one, I didn't know what I was doing.
The parent company of Cyclone Cattle Company, the Iowa feedlot that had been sending Nelson loads of cattle in 2014, filed for bankruptcy in April of 2018. Although he spent 13 months in Leavenworth Camp, a minimum security satellite facility, the time there still convinced Nelson to always dot his I's and cross his T's.
Just imagine being ripped out of everything you've known and thrown into a complete and total different place. You go from working 12 and 13-hour days to sitting around. Your world just comes to a stop. They let you out early if you got a drug case because you got a problem. And, well, I got an addiction too, I guess. Gambling. It's a gambling addiction to playing farming. And, they didn't offer a treatment course for that.
Nelson was released in March of 2018 and is trying to move on with his life. He now farms with his mother, who has had her own operation for decades. Nelson says he has learned some lessons the hard way.
Anybody that's young that wants to get bigger, it's faster is always the better way. Well, not necessarily. It can catch up with you.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
Traders were hard-pressed to find any holiday cheer in the markets as China's buying left a lot to be desired and money headed to the sidelines. For the week, March wheat fell 16 cents and the nearby corn contract dropped 6 cents. Chinese purchases are failing to keep pace with market expectations as the March soybean contract slid 16 cents. The March meal contract lost $1.50 per ton. March cotton plummeted $6.42 per hundredweight. Over in the dairy parlor, January Class 3 milk futures gained 4 cents. The livestock market has the winter blues. February cattle added 30 cents, January feeders cut 23 cents, and the lean hog contract tumbled $3.37. In the currency markets, the U.S. dollar index lost 46 ticks. January crude oil crashed through the $50 threshold, losing $5.88 per barrel, shedding more than 11% of its value. COMEX gold put on $16.70 per ounce. And the Goldman Sachs Commodity Index nosedived more than 25 points to finish at 380.20. Joining us now to offer an insight on these and other trends is one of our regular market analysts, Mark Gold. Mark, welcome back and a Merry Christmas early to you.
A Merry Christmas to you and all your viewers out there. It's great to be here. Thanks.
It's great to have you on, Mark. We certainly don't have a shortage of things to talk about this week, and I want to start here with a social media question, looking at the greater economy as a whole and how it impacts the commodity markets. We've got Stan here on social media. What is the impact of the falling stock market to the grain markets?
Well, it makes people a little bit more nervous when you see what's happened in the stock market. I personally think it's a little bit positive for the grains. We've had such high levels in the stock market, a lot of money in equities, and now they're starting to roll out of it. Now, what are they going to do with that cash? We see a lot of money managers thinking about looking at what's cheap around the world, and certainly some of our commodities here in the U.S. are cheap, and we believe at some point they're going to be coming in. We saw the funds go from about 40,000 long corn to 90,000 in a week. That's telling me some of that market money is coming out of the stock market, coming into commodities. But they're not going to just jump in and buy willy-nilly. They're going to look for breaks. But I think ultimately, the cheaper the stock market gets, it may be friendly towards commodities.
To follow up with you about the corn in particular, is that why we saw so many people liquidate those long positions?
Well, I think what we saw here during the week was just a lack of any real positive developments. We had some good export numbers. It wasn't enough. March corn hasn't been able to close over that 391 area. And with what happened with wheat and with soybeans, the corn took a little bit of a dive too. Now, we went down and filled the gap in both the corn and beans that have been there about 3 weeks since the G20 summit. We closed back over the gap. I think we closed over it today. But the corn market has an underpinning to it here, and most traders are still hoping that we see the Chinese come in and buy some corn as well as soybeans.
Absolutely. Let's get to that here in just a moment, but let's talk about Russia. When we look at the wheat markets, they said they've been kind of playing around with us here saying, oh, we're going to curb exports. Then we got news saying they actually are probably going to increase exports.
Leave it to the Russians. They know how to play the game as well as anybody.
Is that what they're doing here?
I think it's just playing games. That's all it is. When you can move a market 30, 40 cents and you've got privy to that information, you can make an awful lot of money very quickly. So I think all they're doing was setting us up. People got excited, saw a little buying by the funds, covered some of their short positions, and now on Friday they come out and say, nah, not only aren't we going to cut it, but we may increase it. And the wheat fell, a good 10 cents today. So certainly not a help.
So let's talk longer term here. Russia is going to, let's just assume they do increase exports. What's that going to do for the wheat markets worldwide and specifically for U.S. wheat producers?
Well, I don't think they're going to increase it. We saw the Egyptian tender this week, and they didn't take any Russian wheat because they were priced out of the market, which tells us the real fact is they may be a little tighter than what they're letting on. But they wanted an opportunity to sell some wheat at higher prices, so they floated these rumors. Long term, I see some problems here in the U.S. with the production on the wheat crop. It basically got mudded in a lot of places, Kansas, Oklahoma, a lot of problems out there. Now, it's very early, obviously, in the growing season. But I think ultimately, if we can get the dollar cheaper, see a little bit more demand, maybe the Chinese come in and buy some wheat, as been rumored, I think the wheat market could have some legs. But again, we're going to see these sell-offs. Somebody's going to come in, the foreign demand's going to buy it cheaper, we'll rally again, and then we'll see what kind of crop we have.
Mark, when we have a stronger U.S. dollar, that means usually exports are a little bit weaker than normal, but we just hit a marketing year high in corn exports. Why did we see such strength?
Well, I think people got a little bit nervous in here. The funds have been buying it, and the number that we saw on Thursday morning was double what people were looking for. So it's interesting that we get these huge numbers, yet we don't see it in the daily reports on the flash that's supposed to come out. But the totals were huge. The dollar had backed off a little bit, maybe a penny off the highs, but then came right back again on Friday. I don't think the dollar it has to be a long-term effect in the dollar. We have to see the dollar get down to 90 cents before we'll really see a major pickup in exports. On a day-to-day basis, countries are going to buy it regardless of what the dollar is. As long as it's competitive, they're going to come and buy the grain they need. And the world still needs grain.
Absolutely. I want to jump down here to soybeans because we definitely have a lot to talk about there as well. I think the big question, and we got a lot of social media questions this week, is laid out for us. I mean, China is now kind of giving us the olive branch, making some soybean purchases, but how much do they really need to make in purchases before we see some sort of substantial impact in the markets?
Well, let's be clear, the Chinese learned this game as well as anybody from the Russians. Now, the Chinese, they've hinted that they're going to buy 6 to 8 million metric tons of beans. Are they going to make that announcement? No. What they're going to do is disappoint people like they've done over the last 10 or 12 days. The market breaks, they're going to step up and buy it, and then we see these sales. They're nobody's fool, and they're not going to reach up and buy highs. They're going to wait until it's going to be lower, and when they disappoint the market, they know they're going to be able to buy it at cheaper prices. I think right now at this point, they probably bought a little over 3 million metric tons.
Yep, I think that's right.
So if it's 150 million off the carryout, we're still at an 800 million carryout. It's still one of the largest, it's in the year of the largest carryouts ever. We're going to need to see another 4 or 5 million metric tons before that needle will really move on the carryouts, which will give guys, add that to maybe 4 million less soybean acres. Now maybe we've got something we can talk about out here in terms of the soybean market. But 3 million metric tons doesn't really move the needle. It's nice to have. We know they're in the market. They know they want the grain. So hopefully there's another rumor that they'll take another 2 million maybe by Christmas Day.
Yep.
They probably won't do it by Christmas Day. They'll wait till after Christmas. The market will be disappointed. They'll buy it again. They're nobody's fool.
Well, I mean, and speaking of the market being disappointed, we definitely saw that, seeing the lowest close since November 29th, which was just prior to the G20 summit. Now with these lower prices, is that enticing to the Chinese to come? Or do they still want them to be lower?
No, I think they want the beans. I think there's some issues in Brazil that they want a little bit of a backstop. They want to build their supplies a little bit. Parana in Brazil has been very dry. They're supposed to get some rains. But I think the 5 to 6 million metric ton range is a good target, and I think we'll get there. That does knock these carryouts off of these incredibly high levels, and it sets us up for at least the possibility, if there is a problem in South America, that we could see a much better soybean market.
Yeah, position ourselves to take up some of that demand. Let's talk about live cattle. We're heading into the holiday seasons here. Seasonally, this is a time when people are eating a lot of beef and a lot of pork. After the new year, what do you expect to see in the live cattle markets?
Well, we've had a nice rally in this market. We had contract highs in the cattle. Once we took out the 118 level on the cash, our projections are for 122. I think we can probably get there maybe by the end of next week.
Okay.
We tend to make our contract highs the last Friday of the month. So a week from the end of the year, that last Friday, we could see our highs there. And then maybe back off after the New Year's buying. We know the New Year's buying is going to be behind us pretty quickly here. Maybe we sell off a little bit and then we decide what this market's going to be. I have seen over the years, and the 40 some odd years I've been in the business, where we make some highs in the cattle market in December and then we start to back off. And certainly some of the spreads don't work as well. So that could be the situation. Again,
is that the situation for this year from what you're seeing?
From what I'm seeing, I wouldn't be surprised. If we can get to 122 between now and next week sometime, I think that's enough for this cattle market for the time being, and then maybe we back off a little bit.
Okay. Let's talk about the cattle on feed report here. I want to make sure I get the numbers right. We had feedlot inventory up 2%. Placements were 5% below 2017. Is that indicating a replacement problem for 2019?
Well, there's talk about the weights more than anything else, and that going out to April, we see the prices fairly strong back to April, and I don't disagree with that. The placements were down so much because a year ago numbers were so big.
Right.
So to get that kind of a drop isn't that unusual. The marketings were solid. I've been saying the cattle market is only as good as the stock market. I am surprised that the cattle market has held up as well as it has relative to what the stock market's done, which has been a trouble for that market. Now, can we last another week in this cattle market? Yeah, we can. And if we can continue to see the Dow move lower, then I think cattle, you need to be thinking about getting some hedges on, sell some cattle, buy a call if you think there's more upside, or at least have some kind of put to protect the downside.
Absolutely. We also had the quarterly hogs and pigs report this week come out. We, compared to last quarter, we're down a little bit, yet we still have quite a bit of pork in cold storage. So what's the longer term outlook for the hog market?
The longer term outlook is what's going to happen in China. Are the Chinese going to come for the pork? We know that there's been more cases of the African flu showing up. They need the pork. They want the pork.
This is kind of their time of year when they consume a lot of pork.
So, longer term, which is why I think we're seeing the back months at a $20 premium to the nearbys, because we believe that they're going to want some pork. And everything tells me that this pork market, we thought once the December cattle went off the board, we could see the rally. We haven't seen that. We've broken because of the concerns about demand, because of the African flu situation. But I think longer term, this hog market is okay. Well, there's been a natural resistance in the hog market at 90 bucks. So if we see the Aprils get up to 90, is that a good spot to buy some puts for the spring and the summer? Probably is. But let's hope we can bust through it again. We've done it one other time, and that's when we had the virus scare and the pet virus scare. So hopefully we can do it this time on demand rather than something else.
All right, Mark Gold, thank you so much.
Thank you.
That wraps up the broadcast portion of Market to Market, but we will continue this discussion on Market Plus, where we'll answer more of your questions. You can find it on our website at markettomarket.org. While we're there, check out the additional materials for our Justice and Agriculture series. You'll find infographics and short clips that didn't make it into the broadcast. Join us again next week when we'll explore how one farmer is using some of the richest soil on earth to combat food insecurity. So until then, thanks for watching. I'm Delaney Howell. Have a great week and happy holidays.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.